Timmy! Timmy! Timmy!
No, it's Jimmy. Blah, blah, blah. Good evening, ladies and gentlemen. I am Jimmy James. You're watching Catch It Live First. Tonight, we've got something a little bit different for you. First up, I want to go through the Wisla Krakow news. A few things going on off the pitch, which don't make for really good reading or good news. But we'll go through that in a moment. Secondly, last week I did a video on what I do basically for my day job, which is a commodity and forex trader with the odd share thrown in. But it didn't get as many views as I thought it would, but I did get some good responses from it. And I got a couple of emails, and I had a chat with a friend today. So I've decided to do another video. I'm going to do it on this video after we've done the Wisla Krakow football news. And we're going to start with that one at the very beginning. Let's start with the basics of trading. It seems everybody's trying to get into the trading, and I don't blame anybody. There's good money to be made. There's also losses that can mount up quickly, so you need to be careful. So I thought tonight I would go through the basics and hopefully help people stay safe with the trading and maybe assist in making a few extra shekels. But like I say, first of all, let's start with the Wisla Krakow news. It is the 13th of October. And it's 20 past 11 here in the UK. So I've been busy with the markets, I've got to admit, and it's just opened up. And it's not got any better. It's as crazy as ever. Great for making a few pounds. But yeah, not for the faint-hearted. So if you are trading, be careful. Right, we'll do that in a little while. First of all, let's start with Wisla Krakow. So last week, we had the game against Ruka Horzów. I think that's how you pronounce it. It's as good as I can do. I've always struggled with that. My daughter-in-law came on the weekend who's Polish. She was trying to get me to pronounce it correctly. Difficult for Jimmy. Anyone who is in Poland watching tonight, dobry wieczór, nie mówię po polski, angielski, dziękuję bardzo. Wisla Krakow, jazda, tak. Let's go. So, first up, Wisla, we have been punished for the pyrotechnic display that we put on against Ruka. It was a cracking game. It was a cracking atmosphere. Both fans get on, which in Poland is not always the case, especially with Wisla Krakow. But we put on a great show. The referee enjoyed it. You could tell with his face. He had to stop the game twice. He had a big smile on his face. If you've not seen it, have a look online. The pyrotechnic show was superb. There was the flares going off and also the fireworks. You could say it's dangerous. It's part of the show. Come on. Not everything can be about health and safety. So, and if you've ever been to Wisla Krakow, you'll know it's concrete everywhere. You can smoke in the stadium. The risk of a fire, there's always a risk, but it's minimal. But it's been reported by Sebastian Janus. Again, always does some good reporting, does Sebastian. This is translated into English, so bear with me. Wisla Krakow finished their 3-game marathon in a week with 7 points. That's just what we wanted, hope for. 9 would have been nice. 7 is definitely what I was hoping for at a minimum, and we got it. Their only stumble came against Wisla Krakow, which ended in a 1-1 draw. On Sunday, the White Star faced Ruka in a friendly match and emerged clearly superior, winning 3-0. This strengthened the lead at the top of the table and confirmed the position as the main promotion favourites to the Extraclasa. In that, it says a friendly match. It doesn't mean a friendly match as in a sparring match or what in the UK we would class as a friendly match. It means it's a friendly match. There's no trouble and none expected. After the match, the club also awaited an official decision from the Polish Association's disciplinary committee Fans of both teams caused havoc in the stands, interrupting the match in both the first and second half. On Friday, Wisla released a statement clearly stating that the punishment was severe and would apply to the next home match against Stal Rzeszów. The disciplinary committee has decided to impose the penalty on Wisla Krakow in the form of a ban on playing one match in the Bet-Click 1 League with spectators in a part of the stadium by closing down stands A, B, C, D, E13, E14, that's a shame, I like E14, E21, E26, G, H, and the away fan sector for the match against Stal Rzeszów. And that's an excerpt from the statement. So it basically means they've imposed a massive fine on Wisla because of the lack of revenue from fans attending the match. All right, you can say it shouldn't happen, but it does seem, Wisla, we are going to appeal it. Whether we'll get anywhere, I doubt it. But, do you know, in the live chat, a geezer's always in there from Connecticut, in the good old US of A, and he says it'd never fly that the flares getting into the stadium and the pyrotechnic show. And totally, it wouldn't happen in the UK either. You might get the odd flare smuggled in, but yeah, we don't like it. But over it's not just in Poland, in other parts of Europe, it's part of the show. It just is. Agree with it, disagree with it, it's part of the show. And to keep fining clubs when it happens, I mean, I suppose you can check everybody when you go through the turnstiles, and there is security there. I mean, when I went in with my battery pack for my phone so I could do some live streaming, told them what I was doing, yeah, no problem, you can take it in. So they do have the option of checking everybody and searching everybody, but it's kind of going to detract a little bit from the show that is Polish football, and it's fantastic. It is just an amazing, it's not just about the football, it's the event. It's the pre-match. It's having a few beers. It's, you know, mingling at the stadium, getting in the club shop. Then you've got the build-up to the game, the music coming over the tannoy, the atmosphere. It's just incredible. And I think not being able to take flares in and have a pyro show will detract somewhat. And I think that's what's going to happen eventually. So we are going to be playing against Stal Rzeszów with almost an empty stadium, unless the appeal comes through. So I'm not too hopeful, though, to be honest. Mainly because our fearless leader, Jarosław Królewski, is in trouble with the Football Association over a different matter. And this report says the Polish Football Association has initiated disciplinary proceedings against Królewski, Wisla can confirm. Wisla Krakow released a statement announcing that Polish Football Association has initiated disciplinary proceedings against JK. The reason for the action is related to a post on X regarding refereeing decisions against the match against Odra Opole. Now, he did come out after the match, and I know the complaint was that they were wasting time and there was other issues going on. Didn't hold back our owner, and it hasn't gone down well with the Polish Football Association. And it says Wisla Krakow have been facing harsh decisions from the Polish Football Association since the early hours of Friday morning. That was the 10th. Initially, the media reported that the Polish Association had penalised the club for events, as we've just spoke about, against Ruka. Shortly after, another statement appeared. This time, it concerned the owner of Krakow, Jarosław Królewski. The Polish Association's disciplinary committee decided to initiate disciplinary proceedings in connection with his tweet regarding refereeing decisions during the Wisła Odra Opole match. The club announced that it would not be commenting until the proceedings were concluded. The Wisła had said that it had received the decision from the Football Association to initiate disciplinary proceedings, and it was regarding the tweet about the Opole match, and the club are refusing to comment. The international break is currently underway. We don't know what the sanctions are going to be. We'll find out. But yeah, Wisla are not in the good books of the Polish Football Association. If you didn't know, we are hopefully going to get the rights to be able to live stream the Polish Premier League matches, the Ekstraklasa. I've emailed them, we've been in touch. We need a bigger platform. Understandably, we've got 450 subscribers. Not enough. But once the platform grows, they will, from what they say, hopefully do a collaboration with us to stream the Polish Premier League matches. And obviously, we can do the English commentary. It's going to expand the Polish football. And there's no downside to it. What the deal's going to be, I don't know. We'll have to work something out, whether it's a revenue share. There is no revenue at the moment. So how we would work something out, I don't know. But it is in the pipeline. So all we can do is keep working hard, keep growing the channel, and we'll see where it goes. At the minute, Wisla are in the BetClick one anyway, the equivalent of the English Championship. Hopefully we're going to get promotion this season, though, back into the Ekstraklasa, which is a Polish Premier League. Fingers crossed. Next game up, we have got, it's next Monday. I think it's a 6 o'clock kickoff, so join us for that one, the live stream. We are playing Pucha. Struggling a little bit they are, but every game's going to be difficult. And although we are running away at the moment at the top of the league, there's always something that can trip you up. So we're going to have to be on our game. Hopefully everybody's come back from the international break with no injuries. We've had Krzyzanowski, left back, youngster, playing for the Polish under-20 teams. Under-21 team, we had Duda, we had Kaziemka, we had Kutwa, all in the squad. I know Kaziemka and Duda had got minutes. I didn't see Kutwa, but whether he's played again in the second game, I'm not too sure. Best of luck to them, and hopefully everybody comes back with no injuries. Like I said, join us for that one. Next Monday, that's the 20th of October, day before my birthday, 20th of October, and I think it's a 6 o'clock start, so we'll be on a 5 minutes before, just go through the team lineups, and we'll obviously have a pre-match build-up video out as well, so join us for that one. So, that's the football done with. Now let's get on to the trading. The gold, the silver, the forex pairs, that's what I trade. The occasional stock. And what is going on with the markets at the moment? It is like the Wild West. It is crazy town. Crazy, crazy, crazy town. I mean, the market's just opened up at 11, and spot silver, if I can show you that one, it has jumped to $53 and then dropped back down. There was a drop in the March 26 futures price just before the close. It is not for the faint-hearted at all. Let's just see if I can show you on the... Let's see if I can show you on the... That, I mean, that there is humongous, and the spread, that spread, it's a 40 cent spread, which doesn't sound a lot, but that's a big spread. You look at the that's the just behind my head, this one here, that is the December futures. And you can see there, that's what it normally is, something like that. So at the minute, 50, 71, 50, 70. It's about a 3-point spread. That's normal. That's next March 26. That'll be a couple of point spread. This on the spot price, this is basically London having real issues in metal shortages. It's showing plenty of metals in the vaults. However, how much of it is allocated and free to trade and how much of it is not, I don't know. We're not getting the commitment of traders reports. So we're kind of, like I said the other night, we're flying blind a little bit at the moment, but that is a definite issue. That, where am I pointing? That one there. That is an issue. And when it's going to get resolved, I don't know. But there's the opportunity to make money. So, as they say, make hay while the sun shines. So, yeah. So I had a couple of emails from people saying they like the video. And can we do more? Ironically, I spoke to a friend today who is trading, and we were just discussing things, and I said, I'm going to do another video tonight. And I thought, all the people, I'm hearing more and more of people who are opening trading accounts, nothing wrong with that, go for it. But I just hope people will be careful, because they will all be using leverage. And yeah, some of the leverage that's out there is like 1 to 500. Crazy town. It looks good, but it can go against you in a real bad way, and it can go against you quickly. So that's why I wanted to do this video. So let's start off with the basics. So how to place a trade and what to be careful of. So I don't want to do that. No, never mind. How to place a trade, what to be careful of. So when you open your trading account, it's probably going to be, there's so many out there now. It could be, who could it be? I like IG Index, but there's so many out there. In fact, I'm not going to mention them. But it's just, these are things that you are going to have to look at when you open your trading account. So your broker, he's going to be offering you the facility to trade with leverage. What is leverage? Well, it's when you buy long or you sell short using borrowed funds, or margin as it's called, and it allows you to control a position that's larger than your own initial capital investment. Let's keep it easy. So if you put in £1,000 and your broker offers you leverage or margin of 10 to 1, that means you can open a position worth 10,000. We'll do it in pounds. So you've put that initial £1,000 into your brokerage account. That means you can open positions worth £10,000. You've borrowed £9,000. Now, on paper, it sounds great. I've got £9,000 extra to play with. Yeah, it is, if you can make it work for you. So you've borrowed £9,000. It allows you as a trader, because that's what you are, to increase your gains. The flip side is you also amplify your potential losses if it goes wrong. This is why when I put a trade on, I always put a stop in place. This means if the trade goes against you, the broker will close the position out at your maximum risk. You set what your risk is on that trade. It'll automatically be closed out if it hits that set price. Now, what you've got to be careful with as well, and where's there a prime example? There's a prime example right behind me. So if you put a trade on, and if we look at this one here, so look at that red line as it closed tonight at 10 o'clock. It dropped down, didn't it? So when it dropped down, it hit the, I think that's the 20-day moving average. Might be the 50. I can't see from here with my eyesight. Might be the 50. But it dropped down and it hit that, so it closed out. So anybody who was putting a trade on at, if you were going to go short, it suddenly, when when it opened, it opened up and it's jumped. You can see it. You've got the red line, the long red line. So that candle closes at the bottom of that red line. When the market reopened, it reopened at the top of that red line. If you'd have put a stop midway through that line and it's jumped over it, your stop will not, you'll get stopped out, but not at the price you expected. It's basically jumped your stop. Now, that's why you need to be a little bit careful when you're putting stops in place. If you also put, there's something else I wanted to say about that. If you was to buy a share, I'm going to pick a company. Let's pick a company at random. Let's go to the real extreme. Let's say, God forbid, because this would cause so many eruptions, it couldn't happen. It wouldn't happen. If you say Nvidia, now I'm not saying Nvidia is going to go out of business. I'm using it as an example. But if Nvidia was to go out of business, if you had a stop, say, I don't know, 25 points lower than its current share price, if the price drops, you would think, well, I'll get stopped out 25 points below. That's my liability. Oh, no, no. If it goes to zero, that's what your liability is. In theory, if you've got the funds, that's what your liability is. Now, what you can do to try and mitigate that risk, you can pay a premium on your stop, and it's called a guaranteed stop. So if the market jumps your stop that you've put in, like it would have done over there, it doesn't matter. It's a small premium that you pay, but it means if your stop gets jumped, the broker will honour your requested stop, and that's what your loss will be limited at. However, like I've said, if, say, God forbid, Nvidia went to naught, the share price goes, nope, it's not having it. You can have a guaranteed stop in there. It will not stop your shares becoming worthless. If it's going to go out of business completely, complete liquidation, it's going out of business. Your shares become worthless, and your guaranteed stop won't save you. Now, you might get a payout. If it goes to zero and then there's a new issuance or something, you might get some money back, but it's going to be probably going to be nowhere near what you expected your risk to be. So the liability can still be massive, way more than you expected. So if new shares go into circulation, like I said, they might give you a little bit back, but it's not going to be enough to offset your account getting wiped out. What it's basically meaning is you're risking way more than you invested. Now, if you have exposure to a share price via a spread bet, you do have some cover if the company goes kaput and it doesn't reopen or reissue shares. It could still be painful and wipe your account to zero. You know, ouch, it sucks. Absolutely, it sucks. But, and this is really, really important, you won't be on the hook for the rest of the losses. And it's because of the following. And this is with IG index. If you trade with other brokers, then check the rules. I can't emphasize this enough. It is really, really important. And find out who they are regulated by. It is so, so important. So you've placed a long spread bet on a company's share price, i.e. you're betting that the share price is going to go up. Things don't work out and the company goes bust. Its share price collapses, it goes to possibly zero. So if you don't have enough funds in your account to cover the losses, what happens? You know, the company collapses, the share price plummets. Your long position becomes a total loss. There's nothing to come back off it. Well, the position is automatically closed by IG when the market is suspended or the share price goes to zero. So your spread bet loses its full value. So what happens to the balance of your account? If you had enough funds in your account to cover the loss, IG will deduct that loss from your account balance. Your account remains open and your balance just decreases, and if it's enough, it will go to zero, and they will close out other positions if they need to, because you'll get margin calls. It'll just basically go to not, you know, there'll be nothing in there. Now, if you don't have enough in your account to cover the losses, you know, example would be the loss exceeds your account balance, then IG will, and this is how it will work, they'll close out your position automatically as soon as the margin is breached. And that is a margin call. But, and here's the good news, which might stop you crying after your account has gone to zero, possibly. IG will apply what's called a negative balance protection. Now, this, it does depend on your account type and your jurisdiction, you know, where you're actually trading from, where your broker trades, and, you know, that's why it's important that you need to check these things out. So what does that actually mean? Well, IG, for example, like all UK and EU regulated brokers, they must comply with its ESMA, European Securities and Markets Authority. The rules for retail clients. This means you cannot lose more money than is in your account. So, for example, if you're a retail client and a sudden gap causes your loss to exceed your deposited funds, IG will reset your balance to zero. Yeah, that sucks. But those are the risks. We all know it. They will reset your balance to zero. The silver lining is, no pun intended, you won't owe IG any additional money. You cannot go negative. So for to hammer home the example, you've got £1,000 in your IG account. You go long on a company that crashes overnight, you lose £2,000. In theory, your account goes to minus £1,000. Do you have to then find another £1,000 to make good on the loss? I.e., do you have to put another £1,000 into the account to cover that loss? No, you don't. IG applies the NBP, the negative balance protection, to your account, and it is set back to zero. You do not owe the extra £1,000. Result, although it might not feel like it at the time, you would probably look thinking, blimey, I've got away with one there. And I can think of plenty of trades that if they went horribly wrong for people, it would suck to go to zero. But not having to put extra money into the account just to cover the minus figure will feel like a result. I'm pretty sure of that. Now, there are exceptions, so let's go through these. So negative balance protection applies only if you're classified as a retail client. So you're not a professional or you don't have a professional account. You're trading within the UK or EU regulated IG entity, if we're going to use IG. Now, if you were a professional client or trading through IG International outside of the UK or the EU, you can owe the money if the losses exceed your balance in the account. So you could very well be on the hook for the whole loss. That's including what's in the minus figure on your account. I mean, yeah, you could claim it as a tax loss and, get some of it back that way. But ultimately, we're not interested in that because we have the option to stay as retail clients. That is one of the benefits of being a retail client. If you look at going professional, I'm not sure why you would. The only reason I can see is you get the option to go for higher leverage. Do you really need it? I'm not sure. I certainly would never, although I do it as a job, I would never go for a professional account. No need to. No need to. Now, as a retail client, you can use this NBP protection to your advantage if you're thinking of trading Chapter 11 bankruptcies, which in the USA, it's a voluntary bankruptcy. And sometimes it's just done sort of to restructure debt. I've just had a fantastic trade, really, really profitable. And it was a company, Wolfspeed, went into Chapter 11 bankruptcy. Plenty of orders out there. They just needed to restructure the debt. What did we buy the shares for? I think we bought the shares for £28 each. And eventually, once the new shares were issued, we had exposure to the new share. And we settled on £1,800 per share. A good trade. However, they don't always work out like that. It's a little bit of a gamble. But when you can look at a company's future orders, their future cash flow, you can kind of gauge what's a good gamble and what is really, a risk. But that was something that was worth doing. They're few and far between, but if you do your homework, do your research, find out what you're doing, be really, really cautious. I will never give financial advice. I will never give legal advice. I'm not allowed to do so I won't do it. I'm just telling you what I do. Be really careful, but there are profits to be made out there. And there's a bit more to it. You've got to look at the fundamentals. But yeah, it can be highly rewarding. It also carries huge risk. And it's just the way the system works, this NBP, it can work in your favour. No, I'm not recommending it, and I'm not giving financial advice, like I say. And everything I say today, you should take it as the ramblings of a fool. So do your own due diligence. But there are ways that you can use the NBP to your advantage and mitigate your risk should certain trades go against you. That are risky trades, they are. But use the system. Them's the rules. That's what we work to. I'm digressing anyway a little bit. So these kind of trades also, they are a little bit advanced, and that isn't what we're doing today. But one last thing on talking about the negative balance protection, it doesn't always pay to have more money than you need in your trading account. If you get a margin call and you don't want to close out any of your positions, you can always add funds. These amounts will be different for every trader, but just something to think about. Why risk more than you have to? If something went wrong, why would you want your why would you want your deposits at risk when you can use the NBP to your advantage? No need to hold way more money than you need in the. You'll get to know how much, what your trading style is, how much you need. So yeah, let the NBP be your, I wouldn't say your friend, because if you're using it, things have gone wrong and you're probably losing money, but it can also work in your favor and mitigate your overall risk. So in summary, if you're a retail, say, IG client in the UK or the EU, a company goes, you're long a company and it goes bust, you'll lose your stake, but you won't owe IG more money, even if the loss exceeds your account balance. If you can understand that, then hopefully it'll help you trade. It'll help you keep your account funded to the correct level, which is important. Managing your account balance is sometimes as critical as managing the trades that you put on and finding the right trade that suits you. If you use a different platform, check the laws regarding the NBP. You've no excuse to be left on the hook for more losses than you have in your account. Anybody can check out that. If you need to just send an email, have a look in the terms and conditions. Terms and conditions can be difficult to understand, I've got to admit. But you can send an email, you can ask the right question regarding NBP for retail traders. It is important. So, you've put your trade on. You've gone long, so you expect the market to go up. Or you've gone short, you expect the market to come down. Your stop is in place, so you tell the broker what you want your maximum risk to be. The broker will automatically close you out as close to that price as possible. You have a limit in place. You've told the broker where you want them to close your position for hopefully a nice profit. I don't always use a limit, as I like to kind of see where the market momentum is going and how it's behaving before I close out. Sometimes I'll do a partial close and leave a little bit running, kind of maximize the profit on the trade. And sometimes I do put a limit in, but way higher than I'm expecting or hoping for, just in case there's a quick spike in the price. Maybe there's a little bit of a liquidity sweep going to take place. And it's a liquidity sweep that's targeting shorts. So sometimes I will do that just in case you get, and you'll see it on some of the, the candles where you can see it over here. You'll get a quick, and it can you can make your profit in the blink of an eye. So it can be useful from that point of view. So your trade's on, the price is moving around. All you have to concern yourself with is, are you going to make a profit or not on the trade? And do you need a spare pair of underpants? Well, there is more to be considering than just, are you going to make a profit or are you not from the price movement? You will more likely be trading using leverage. In fact, 99% you will. As soon as you put your trade on, it is losing money. And that's because of the brokerage spread. So if you have a look at your open positions, as soon as you put the trade on, it'll probably go red, unless you're really lucky and it moves away quickly. It'll probably be red, and that's because of the broker spread. That's the difference between the buy and sell prices that are quoted by the broker. Now, this can differ massively, the buy and sell price, and it depends what you are trading. If you're trading cryptos, I don't trade cryptos. I don't know enough about them. I don't understand them, so I don't trade them. But I know the spreads on them are quite large. On silver, it's normally between 2 and 3 points on the spread. That's how we know off looking at this, I mean, what's the spread now on that? Blimey, 38 points, something like that. That's a wide spread. That's just fear in the market, and we'll speak about that more. That's not the norm. That is not the norm for silver. It's normally around, like I said, 2 or 3. So yeah, that's why as soon as you put your trade on, you've not done anything wrong. It'll probably go negative. That's because of the brokerage spread. Also, because you're using leverage, your broker, they will have what is called overnight funding or swap rates. And we may as well take spot silver. It's because at the minute it's a great example. Because at the moment, these swap rates, they look massive. You know, the buy, the sell, the spread, it is huge. Like I said, it's not the same. So let's think about what's happening and how it's baked into the way spot CFDs are priced. So CFDs, contracts for difference. These something else I wanted to say as well, with the overnight funding for the swap rates on spot silver, it is a good example because they are massive compared to the futures market. And we'll talk about that now. So you've got 2 options. If you wanted to trade spot silver behind me, you can also trade the futures. And the way these are funded are very different. So these these are spreads, contracts for difference, whatever you want to call them. So spot versus the futures, they are 2 very different instruments. So we are trading long spot silver CFDs, contracts for difference. It's a continuous rolling contract tracking the current spot price. Trying to find it with my finger. It's tracking the current spot price, and it just continually rolls over. IG rolls it over daily, and it charges overnight financing because we've borrowed money to hold that position open. Now, to avoid this cost, you can close your position out just before the market closes or whenever you're ready to, and you avoid the carry cost. When the market reopens, you can open it up again at a time that suits you. But don't forget, if you're going to close it out just before the close and you're going to open it just after it reopens, if the price is the same, you will still get a charge because you've got the broker spread. So if you're thinking of being cute and, well, close it just before it, before trading closes and reopen it, you can do that, but they will get you with the brokerage spread. So there is going to be some cost regardless of which way you do it. If you can work out what is the best way for you, it depends on what trade you're doing. And I'll tell you more about that. If it will stick with silver, the other thing I wanted to say, if you notice when the market's just going to close, sometimes you'll get a little blip in the silver price. And that's because people will close out. They won't want to pay the carry cost. So that's why you sometimes get a bit of a fall. Sometimes you might get a bit of a rise as well. But mainly it would be to the downside just because they don't want to pay the overnight carry costs. Another thing to say, if we were shorting silver spot, we would in effect be borrowing the commodity. We would be borrowing silver because what we're doing in effect, we're selling silver that we don't actually own. If you think about it, when you're shorting the metal, you're saying you're going to sell it, but you don't actually own it. So we would, in effect, then we'd be lending cash out and not borrowing it. So depending on the interest rate differential between the US dollar and silver's implied lease rate, which at the minute is going through the roof, look at the spot price in London, we could actually get paid out to hold that position open overnight or to the next day for trading. So where you would think, yeah, we're going to pay the carry costs. If we were shorting, if you think about it, we would get paid to hold the metal, and because we're holding the metal, we are in theory becoming the lender of cash, and we could get paid. There's the calculation of you've got to do the lease rates with the interest rates, and it's normally, it can be a few percent. So there is that option as well. That's something to think about when you get a little bit more experienced as a trader. And it's just something to think about. There is a caveat to that scenario. And it's if silver's in backwardation, so the futures price is the futures price is lower than the spot price, which is ultimately, it's not the norm, but that's what we've got. So that's what for this exercise, that's what we'll go with. So now silver's in backwardation, so the spot price is higher than the futures price. The broker, they can credit your long spot silver trade because of backwardation, and that's because silver's higher lease rates make it profitable to hold the metal versus having the cash. Meaning the carry trade, it works in your favour for this long, as it would be if silver was in contango, which like I said, that's more the norm. And if we were short in silver, so we'd be borrowing the metal and lending the cash out. It all sounds confusing. But once you get your head around funding, it can provide a revenue stream as well as just the price movement. You can actually be paid for staying in the market and not closing it out. So rather than getting a charge against you, a carry cost, you actually can be paid for either lending the metal or lending the cash. You'll get used to it. You will get used to it at some point, because when you pay your carry costs, you wonder why your account has gone down. And you think, hang on a minute, why has it moved? And if you have a look at your history, it'll show you what you've been charged for carry trades overnight. If you can get that into the plus, you are doing well. Now, if you trade silver, but in the futures market, so that would be over my head and over here. That's the March contract. Above my head, that's the December contract. If you trade in the futures market, there are no real carry costs from funding of silver's futures. That's because it's a fixed contract that already includes the carry costs in the price. You don't pay daily financing. It's kind of priced into the contract up front. Now, when the futures contract expires, say for silver, say for this December one over my head, that December contract will expire on November the 25th in the UK. And it could automatically roll over into the March contract in March 2026. And that one will expire on the 26th of February. I think the final time is 6:25 in the evening when you get options expiry. If you don't want the futures contract to roll over, you would need to close the contract out before options expiry at 6:25 p.m. in the UK on that specified date or before. Otherwise, it will automatically roll over. So I hope that's helpful if you're relatively new to trading. It's not an exhaustive rundown, but it might give you a glimpse of the procedures and perhaps highlight some of the potential pitfalls. Now, whether I've explained it well, I don't know. And I don't want to make it too complicated, but these really are the basics. I mean, you can also, most of the brokerage platforms, they have demo accounts, so you can kind of practice there. I don't say that you would have carry costs. Don't know how that would work. So, but unless you're really hitting the trading hard, then the carry costs are not going to be prohibitive, for your trade, depending on whether you're in the spot market or the futures market. If you're in the spot market, it then becomes an issue of how long are you going to hold the position open for, because, carry costs can mount up. But yeah, it's something to be aware of. They are kind of the pitfalls when you are putting a trade on and you're looking to make a profit. First thing, make sure that you're limiting your risk as much as you can. Secondly, and I was talking to someone earlier today, and it was kind of put your stop in your maximum risk, and have an exit strategy as well. Kind of have a plan of how much you want to make, what profit you want to make from that trade. You can adjust it. If the market is going in your favor and it keeps going and it doesn't look like it's going to stop, why would you close it out? I mean, personally, I wouldn't. You kind of let it go till it loses a little bit of momentum. Maybe then you would close it out completely, or you would take some off the top, take some profits and leave a little in, let it keep running and just see how far it can go. These are all things that once you get into the rhythm of trading and find out what suits you, what suits your risk tolerance, what you're looking to achieve. Everybody is different in that regards. So yeah, have a plan, and like I said, I'm not giving financial advice or trading advice, but I try and stick to it as much as I can. And yeah, don't get married to your trades. It's not something that is a good thing. If it starts going against you, and you think, actually, it's not looking good. Don't be thinking, but I love this trade. It's going to be right. Sometimes it's better to just bail, live to fight another day, take a breath, have a little cry, and go again, rather than end up wiping your account out and having to put more money in. Sometimes it's better to run away and fight another day. But everybody is different. You'll learn as you go along. You'll make mistakes. I've made every mistake in the book. I'm just trying to help people now, hopefully, to limit the mistakes that they will make, or limit the cost that the mistakes are going to have on your profit at the end of the month. Now, like I said, I was talking to a friend today who's trading, and he was saying that there was a price move at 4:30 in the UK, and it caught him out and took some of his profit, which is somewhat annoying. So we were talking about the times of the day, when as a trader, you need to be aware of potential price deviations through markets opening and closing and data hitting the tapes. And so I thought I would go through the list of times that I'm wary of, of sudden price moves. Doesn't give you a lot of time for sleep, but hey, if it was an easy game, and that is the game ultimately, then I guess a lot more people would do it. So these are the times for me that I'm wary of. So we can start with, let's start from midnight. So you've got Japan opening. This is in the UK. Tokyo will open. So you get a major liquidity pickup in the yen, in the Nikkei, and the metals will start moving. Then you get China, Shanghai, and Shenzhen. That's at 1:30 in the UK. The Chinese stocks come online, the Chinese yuan, they set the reference rate. Don't forget, with China, it has two rates for the yuan. It has the onshore, where it's pretty much controlled. It's a controlled rate. And then you've got the other yuan rate that is more international, and that's when they set that at 1:30. It's still relatively, I won't say it's freely traded. I don't think it is, but it does have more room to move if they want to mess about with the interest rates outside of China itself. You've also got, with Shanghai, you've got the metals exchange that opens. So that is a physical market, and it can move the futures market from the COMEX and obviously the spot price. Also at 1:30, you've got Hong Kong, Singapore, UK, 1:30 in the UK, the Asian metals and the Hong Kong equities, they open. You can get liquidity really kicking in at 1:30. 3:45 in the morning, India's opening. So you've got the rupee coming online, Indian equities, you've got the gold and silver, the futures are active. India are big buyers of silver and gold, of course, so they can move the market at 3:45. At 5 o'clock in the morning, UK time currently, it becomes a new day in the USA. So you can get changes at 5 o'clock in the morning. As the UK moves over, they're catching us up on the same day. So you can get a movement at 5 a.m. Asia closes about 8 a.m. and that is when the UK opens and Europe. So you've got the French, German, pretty much all of UK and Europe opens at 8 o'clock. So you can get liquidity spikes. You've got Frankfurt, you've got Paris, you've got Zurich, along, like I said, with London. And that's normally when we get the first big volume spike. We get the British pound currency pairs starting to kick in. The FTSE opens. Gold and silver liquidity surges then, normally at 8 o'clock. Sometimes a little bit before if somebody wants to beat the market and get a price. But from 8 o'clock, we normally get some real increases in liquidity and volume. So during the morning, the LBMA gold price, the AM fix, that's at 10:30 in the morning. We get the PM fix for gold in London. That's at 3 p.m. and that's the one that's used globally pretty much for settlement. Silver, that's at 12 noon. We get the official daily silver benchmark. That is for the CME and for the LBMA. I've got to stop calling it the LBME. That was the metal exchange. It is the LBMA. At 1:30. We often get data out of the USA, whether it's jobs numbers, whether it's CPI, PPI, it could be GDP. It normally comes out at 1:30 in the USA. So keep an eye out for what is coming out on that specific day. It really, really can move the markets. 2:30, the US stock market opens. 4:30, as we found out today, the UK markets and Europe, they close. 4:30. 6:25 in the evening, we've got options expiry. 7:30 in the evening, we've got future options expire. And it's around that time that traders start sorting out the positions. You know, maybe they're dealing with, if they've got a margin call, they'll have to sell some positions, or they might have had a tap on the shoulder from the compliance officer at the brokerage, say, you know, telling them to adjust the positions, and maybe they need to hedge something a little bit, or they need to offload some positions because they've gone over a limit, or, you know, so that time from 7:25, 7:30, and a lot of it is done automatically by algorithms. So there's no human interaction needed. It's done automatically. So you can get some quite severe price moves around 7:25 in the evening. This is in the UK. 9 p.m. the US markets, they close. So then it can go a little bit like somebody's turned the switch off. Not at the moment, because it's like a starting pistol. Everything goes onto the futures market, and it's not stopping in the commodities, and it's not just gold and silver as well. You know, you've got platinum, you've got palladium, copper's been starting to get a bid, and then you've got your soft commodities, the forex markets. What's going on with Japan? The new prime minister, the new ruling party. You know, the coalition that they've had for how many years is gone. There's a new regime taking over in Japan. How's that going to affect the yen? Are they going to defend it? Are they going to let it weaken? Are they going to increase interest rates? There's all these things that are coming into the market, and it's pretty much, it is 24 hours a day. Apart from 10 o'clock, we get a little bit of a break. The markets close. Not all the markets, but the commodity markets do. The metals markets close for 1 hour, and that's where they go into their, they call it the daily settlement break. So you can kind of take a breath just for that hour. Then at 10 o'clock, by the way, Sydney opens, and the Asian session begins. And so, it is relentless. It is stressful. But honestly, if you can embrace the chaos, there are profits. There are profits to be made. And on that note, let's see what we can do overnight. The metals are going to throw us more opportunities, whether it's long or short. At the minute, I definitely thought we were going to have had a pullback by now, maybe to the 200-day moving average. It's not happened yet on the spot market. It's not happened. We did have it a few days ago, last week it was. But since then, it's just bounced. And if you can see that thick orange line, that is VWAP, which is, it's quite an important metric. It's the volume weighted adjusted, the adjusted price. It seems to be running off it. It just breached it today once pretty much, and the rest of the time it's just bounced off it, and it's going up and to the right. And that price, as I'm looking at it now, 52.35, 52.45. So as you can see, the spread, it's coming to 10 points. Now it's up to 15 points, but it has come in from like 38 points. It was at 50 points earlier. But it's going to be another evening of carnage. Apparently they've been flying silver into the LBMA. Whether it's the short traders that are trying to cover their positions now, because they've been throwing shorts, paper trades at this price for, it seems, forever. And now the volumes are so big, it's not having any effect. And as soon as you throw paper at a commodity, it's all right if the price goes down. But if somebody takes the other side of that trade and they stand for delivery, it can create a short squeeze, and it can create a short squeeze quickly and in a big way, and it looks like that's what's happening. We could be on the cusp of finding true price discovery for silver and for gold. Yeah, it's going to be an interesting night. So on that note, I tried to keep it as simple as possible, and I feel I've kind of failed a little bit, but I don't know how else to say it in easier to understand terms than If you're trading, you'll be using leverage. If you're using leverage, it's probably going to be around 10 to 1. That means if you put £1,000 in your account, you've got £10,000 to trade with. In other words, you're borrowing £9,000. Look after that. Look after that money and do not risk more than you are prepared to lose. Be aware that you may be risking more than what you've put your maximum risk at for the reasons that I've said. If something goes out of business, if something jumps your stop, you can be left with a bigger liability than you expect. Understand that. Understand the MBP and how you can be protected and how much you should keep in your trading account. Try and protect yourself at all times. If you can expect the worst, not from your trade, but just try and think about what's the worst thing that could go wrong now. Because if you can think what is the worst thing, you can kind of prepare for it. It probably won't be as there's probably way worse things that can happen than you can think unless you're an experienced trader. But try and understand what your liabilities are and work around them accordingly. Then don't over leverage. Enjoy the trade. You don't want to be panicking every little move that it makes. That's not a recipe for longevity trading. It will burn you out. It will give you, at times it can give you such a fright that you think, I don't really want to do this. And that's not what this should be about. If you can try and make it fun, if you can try and be realistic in what you're expecting, if you're going to put £1,000 into a trading account, what are you expecting your returns to be from that £1,000? Let's say what you're going to get from a bank now, 3.5%, 4%, tops. So £1,000. What's that going to give you over the year? You're going to get 40. You're going to make £40. So if you're going to put £1,000 into your trading account and think you're going to turn it into 100,000, just think about what you're asking yourself to do. You're asking a lot from yourself. So be realistic on what you expect from your gains. Try and build your account up. Try and, I don't know, what would be, if you've got £1,000 in there, try and double it by this time next year. I don't know. Whatever your risk tolerance is or whatever you're expecting. But be realistic with yourself. Don't put yourself under too much pressure. There's enough pressure in this game as it is. So, yeah, try and be kind to yourself. Try and enjoy it. Try and trade safely. Educate yourself as much as you can. It is the best way to do it, and you will get the best results. Right. On that note, we're coming up to 12:25. I'm going to go and get a coffee now and wait for 1:30. Why am I going to be waiting for 1:30? Come on. We've been talking about this. What happens at 1:30? I'll give you another 10 seconds. Then I'm going to tell you. No cheating. So Japan and Tokyo's opened at 12. 1:30, we get Shanghai coming online and Shenzhen in China. That's when the Shanghai Metal Exchange will be trading. Also, Hong Kong, Singapore, that comes online. So we can get liquidity spikes. As things stand, looking behind me, the futures are looking a little bit of movement. Spot in London is that spread's come down to 10 points, which is still high. Not as high as it's been, that is for sure. But yeah, 1:30, we will see what happens. Like I said, I won't get a coffee now. Hopefully you've enjoyed tonight's video. If you have, please give us a thumbs up. If you can be a subscriber, that'd be fantastic. That'd help me with the Polish Premier League. And if you can hit the notifications bell, you never need miss a video or live stream again. It's been my pleasure. I am Jimmy James. You've been watching Catch It Live first. Trade safely, make some money, and I'll see you again real soon.